Good morning. I'm Dean Heskin, President and CEO of Swiss American Trading, and you are tuned into our podcast entitled The Secret War on Cash. And you may be asking yourself, what is the secret war on cash? Well, it's the stuff that we're living in every day. And anymore, this war is seemingly heating up. I have with me my co-host, Chris Agelastos. Chris, good morning to you.
Good morning. How you doing?
Good. We're breezing into 2025. 2024 was a blur, and
Yeah,
2025 is upon us. So let's
yeah,
get right into it here. We're talking on our first article here about the banks and talking about how central banks will prioritize government spending over inflation in 2025. And what's I think kind of interesting about this is that the central banks they've been a topic of discussion and controversial discussion for quite some time now. The relevance that they play in our financial markets and our economy is huge, absolutely
yeah,
huge, and the effects that they have huge as well, and then obviously the global implications as well. But it just when I saw this headline, what kind of struck me is that each of us every day are doing what we can to not only obviously you know pay our bills and whatnot, but also plan for our future, invest, etc. And you see a headline like this, and it just reminds you as to how much there are factors involved that are well beyond our control,
yeah,
and we can put our best laid plan together. But you have again these central banks that are just making this decision that they're going to prioritize government spending over inflation in 2025. And
yeah.
now, I don't want to steal the thunder here, Chris, so I'm going to let you kind of explain what this
hmm
all means. But it just again speaks to the fact that nothing really, when you get right down to it, happens by accident in our financial markets or economy. I mean, there is a lot of orchestration that goes into this. So
Yeah.
expand a little bit on this, and what does this mean exactly?
Well, central banks are supposed to be looking after our currency and our economy, yes, but really, helping us maintain our purchasing power with our dollar. And that's why they adjust interest rates, raise them, lower them as needed, or at least that's why they're supposed to. But people have long said that the central banks really aren't independent. They're supposed to be operating for us, and really they're so tied in with the government, even though they're independent of it. They work really hand in hand, and they're not supposed to make adjustments for political reasons. Of course, we saw them, drop interest rates half a point right before the presidential election. A lot of people thought that was to maybe help Biden get a chance or have a better chance of winning the election, saying that I've controlled inflation and now rates are coming down. And what they're talking about here is rates shouldn't have come down, and that it was very clear that was a very clear move that the Federal Reserve did, that they shouldn't have. And so they're saying that essentially this isn't going to change in 2025. The central bank is going to inject as much liquidity as necessary to kind of keep the economy humming along, and what that's going to do is cause continued inflation, and that really there is very little independence, and they're ignoring price stability. I mean, we've all felt the pinch of inflation over the last several years, and while it has slowed a bit, we're still seeing most of our prices increase. So the bottom line is, expect more of this to continue in 2025, unfortunately. And the Fed is not going to fight the U.S. government.
I saw
It's
that in there.
gonna,
It's
yeah,
interesting. And
yeah, they're gonna
it's give them the punchline. The Fed's not going to fight the government, and what are they going to do?
they're gonna pass the bill to the consumers, and that's you and I.
Unbelievable,
So and everybody else listening to this.
right? Right. Well, and that's, I mean, there are some, little nuggets in this article,
Hmm.
inflate in the just underneath that part, inflationism is not back. It never left. It was only disguised
Right.
by empty promises. And I couldn't agree more. Like what they talk about here is how you know, independence vanished, and I'm reading from the article just above
Yeah.
where you were quoting there. Independence vanished when central banks abandoned or ignored price stability, blaming inflation on various absurdities, which I 100% agree with, instead of government spending and money supply growth. So, it really just speaks to, we already saw, shortly after Trump won the election, where Yellen was apologetic about all
Hmm.
the debt that she's passing on to the next administration. And I was thinking about this as well. I guess somewhat thankfully to me, anyways, it seemed like the Biden administration, his term kind of went quickly. And maybe it's just
Yeah.
because time seems like it's flying. But and I thought about that, it's like even though it kind of went quickly, it doesn't change the fact that debt was still growing exponentially every day, and that interest
Yeah.
on that debt was growing exponentially every day. So even though time
Yeah.
seems like it flies, doesn't slow down that part of the equation whatsoever. In fact, if anything, probably sped it up a little bit if that's
Yeah.
possible.
The money printing continued excessively, even
Yeah,
though his the term was a quick 4 years, let's say.
right. Well, and so now getting into this next article, and you're probably asking yourself, Chris, like, why did I put this one in there? We're talking about central banks, talking about the Fed, talking about debt and whatever. And I just found it ironic that, as I read this first article and then looking at this one, how the biggest banks sue the Federal Reserve over annual stress tests. And for those of you tuning in, like if you're not familiar with what these stress tests are, it's basically kind of like with our health. It's something that the Fed does in order to try and give a healthy a pass or a fail, on the financial stability or strength of a bank. And the reason I find it kind of ironic is that I think that central banks and the Fed could use some stress tests of their own, because like you're talking about, it's kind of like you have the mismanaged managing the others out there, and
Right.
it just doesn't seem right. So, this lawsuit. I mean, talk a little bit about that, Chris. Like, what is this? What's going to happen with this, or is anything of consequence going to happen with this?
Yeah, good question. The banks, so bottom line, the banks here, led by this Bank Policy Institute, who they represent a bunch of different banks, but some of the big ones like JP Morgan, Citigroup, Goldman Sachs, names that most people would recognize. They're suing the Fed, saying, we're not against the stress tests. We think the stress tests are good. We just don't like the restrictions that you're placing on us. We think that it is unrealistic and doesn't match up with what is good for our banks and our consumers. And really, I think, I mean, you got to kind of read between the lines here, but I think the bottom line is the banks don't like being told what they can and can't do with their money. Now their money is really our money, the depositors that put it into their banking system for them to use and lend out, and they want to use it how they see fit to maximize their profits. I think over our protection. One of their complaints is that the reserve requirements that the Fed is placing on them are unnecessary. But my argument would be, is there really a such thing as having too much of a reserve? I'd
Sure.
rather that they have more reserves in backup to protect against shortfalls and bad debt, bad loans, things like that, than not enough. And I think most people, right, most people listening to this would probably have rather have 5 times the amount of savings necessary on the side for a rainy day than not enough. And so
Right.
that's why, to me, I don't exactly feel bad for the big banks, right? I mean, they're making billions and billions of dollars already. And one of their main complaints here is that, their hands are a little too tied and that they want, more freedom to be able to use our money as they see fit.
Right. Well, what I also found a little bit ironic about this article
Hmm.
and this move by the big banks to sue the Federal Reserve, you know, these stress tests have been going on forever.
Hmm.
And of all times for them to take exception to these stress tests, on this podcast alone, I mean, think of how many episodes we have done about fines, penalties, problems with
Right.
banks. The it's not it's and it is these same big banks that
Yeah.
we've been covering that this stuff has been happening. So of all times for them to be saying, you know, hey, listen, we're not in favor of this stress test. We think it's jaded or
Yeah.
slanted or whatever else. If ever a time in history it would seem that they need to have more stress tests in place,
Yeah.
this would seem to be it. So, and that's, you know, it's going to be interesting to see what does develop in the whole banking industry over the course of the next year, because you know, certainly there's a lot of debt, like in the first article we covered, you know,
Hmm.
2025, 2026 is where a lot of this debt is coming home to roost. So
Yeah.
I mean, will the implications of that on our financial markets, on our currency, on our economy are going to be huge. And rest assured, we'll be covered. And that's why we call it the secret war on cash, because
Yeah.
it is a war out there, and that battle is only heating up. So, how can people find out a little more about the secret war on cash, Chris?
Yeah, probably the easiest way is to visit our website. That's www.swissamerica.com. And you'll see a couple of different places there where you can click and request info. Just give us your contact information so that we can get this out to you. We do have other reports as well. Secret War on Cash is by far our most popular, so we'll definitely include that. But if you give us any other info about other financial topics or issues you're concerned about, maybe what to do in these situations, how to protect your savings, we can kind of customize the packet we send to you. You can also call us at 800-289-2646, or even just send a text to that number and we can communicate with you back and forth to get your information and get a good packet of intel out to you.
Fantastic. Well, there you have it, folks. If you have not called or you have not visited us online, please do so. And if you're not subscribed to this podcast, do that as well. Thanks, Chris. We will look
Yeah.
forward to talking about more on this topic here in the near future, I'm sure. And until
Yeah.
then, thanks for the info, and for those of you tuning in, thanks for watching or listening. And we look forward to meeting with you or visiting with you again sometime soon. Have a great rest of your day.